Hi, I'm Michael. Welcome back to my properties. Today, I've invited Elane Goh.
Hello.
She is from Vision 100 Consultancy. Now, she is an expert in property insurance. Let me ask you, Elane, is it very important for a property buyer to buy mortgage insurance?
Of course, because this is for peace of mind and also it protects our family.
Because last time when I was working in the bank 20 years ago, I always get the borrower to buy mortgage insurance. Some of them doesn't really want to buy. They thought, oh, nothing can happen to them. Do you encourage people to buy?
Of course, Michael, because as we enter into a property purchase, right, we have a debts, a
Correct.
liability,
Yes.
which is owing to the banks.
Yes.
So we need to have peace of mind and protect our family. In the event of death, right, and the debts has to be settled.
They can still claim, right?
Exactly.
True. I have this case before. Just a bit of sharing. This guy, okay, he came to me. I did his loan, and I told him to buy a mortgage insurance, MRT mortgage insurance. He doesn't want to buy. It's only a few hundred ringgit. He thought it's troublesome. He doesn't want to buy. So he went off. He don't buy. The loan was about to release. Something happened to him. Okay, unfortunately, he passed away. Now, the wife came to me. She wanted to claim the insurance to pay off the loan. I told her, you cannot claim because actually your husband did not buy anything. This thing I feel is very sad because at the end of the day, the wife has to pay all the payment of the house. Am I right to say that?
Yes, you're right, Michael.
Let me ask you. There are two different types of mortgage insurance. Can you explain what are the two types?
Normally, in the market, we will only most of the time listen about mortgage reducing term assurance, which is MRTA.
Yeah,
right?
we go into the bank. Normally they will sell us MRTA.
Yes.
Yeah.
So another type is called mortgage level term assurance, MLTA. So the difference is only by one word, which is reducing and level.
What is it?
Yes.
What would you mean by reducing and level?
Yes, reducing meaning it is following the tenor and it's reducing as we pay off our housing loan. It will reducing cover based on the outstanding amount.
Meaning, just an example, if you take up a loan of 500,000 for
Yes.
let's say 30 years. Now, after 10 years, 20 years left with 10 years, something happened to the person. Okay, so the loan is left like let's say it's 400,000. So the bank will the insurance company will only cover 400,000, not
Yes.
500,000.
Exactly.
Yeah. How about MLT, mortgage level term assurance?
Mortgage level term assurance, when we enter the contract, from beginning until end of the tenor, it will cover level. Meaning 500 from beginning of the contract until end of the contract, they will be exactly the same. It will not reduce.
Oh, MRTA, mortgage reducing term assurance, you don't get money back upon
Exactly,
expiry. Yeah.
exactly.
How about MLTA?
MLTA,
Yeah.
there will be cash value inside this policy. So at the end of the day, the cash value can be taken as part of the settlement to the loan amount, so that in fact this will help us to pay off our loan early.
Oh, I see,
Yes.
I see. So that is the difference because to me, but borrowers, they are confused whether to buy MRTA or MLT. What do you think? If I'm a first time home buyer, I'm the first time home, should I buy MRTA or MLTA?
I would suggest if we have a limited budget,
Yes,
and
correct.
we should at least cover under mortgage reducing term assurance.
MRTA.
Yes,
What does it actually cover?
it's cover actually total permanent disability and death.
Okay.
Yes.
Death, we know death. But
Exactly.
death. What I always tell people, you want to the person. Okay, the person touch wood, something happened. The person want to hang himself. Okay, touch wood. Okay, can he claim?
Okay, for suicidal case,
We
it has
can
to
turn
be,
it to suicide.
yes,
Yeah.
it has to be at least after 13 months.
Oh, you need,
Yes.
there's a time frame.
Exactly.
Oh, so be careful. If a person wants to suicide, it has to be after 30 months. Okay, so now permanent disability. What does it cover? How can you claim?
Yeah, the definition of total permanent disability is loss of use of one pair of your body parts. Body parts.
Okay.
Yes.
For example, if I lose 2 hands,
Yes.
I can claim.
Yes, there has to be one pair, meaning 2 arms, 2 legs, or 1 eye, 1 arm, or 1 arm,
I see.
1 leg. It's considered one pair.
You must. The condition is you cannot work at all. Am I right to say that?
Loss of use of one pair
Oh,
of
I
your
see.
body parts.
Oh, then you can claim.
Yes.
Okay, so it's quite limited, right?
Yes, it's quite rigid in a way. It's the definition as such.
I see. Then, can I buy additional coverages to cover other things?
Of course, that we can request to add on critical illness cover.
I see.
And I will elaborate this more in the next session.
I see. In MRTA, mortgage, not MRTA, MLT, mortgage level term insurance. Okay, for me, I would think that if you are a property investor, it is very good to buy MLT. What do you think?
For my personal opinion, many people think that MLTA is very costly.
Yes. You cannot finance in the loan like MRTA. You have to pay either by monthly, quarterly, or yearly. Am I right there?
Yes.
Yeah.
In fact, in long run, it's cheaper, especially
I see.
if we plan to be an investor throughout the whole investment lifespan.
Okay.
We plan that we want to venture into property investment for 20 to 30 years, right? So if we buy early, subsequently that will be cheaper because we are younger and then we get the rate, we lock the rate at a younger age.
I see.
Yes.
The younger you buy, the cheaper it is.
Exactly.
Okay. As a property investor, let's say I bought MLTA for this property. Then I decided to sell this property. Can I carry on this to another property? Can I be insured? Using the same insurance?
For MLTA, yes. For MRTA, no.
Oh,
So
means
for MRTA
MLTA
case,
more flexible.
Exactly, flexible, and we can adjust the coverage to top up as it increase or to reduce it.
Yeah, that's what I want to say.
However, it's with the condition that our health condition is good.
Okay,
Yes.
okay. Make sure your health is good if you want to
Yes.
do property investment.
Exactly.
Okay. I got it clear. If you're a first-time home buyer, if you don't have a budget, buy MRT at least.
Exactly.
If you're a property investor, better buy MLTA because it's cheaper. You can carry over to another another loan, another property.
Yes.
Am I right to say that?
Exactly.
Okay, very good. Any parting words for our property investor in insurance?
The parting words will be, as we venture into property investment, we are moving forward to make money in the property industry.
Correct.
And everyone would like to have peace of mind, and especially taking care of our family members.
Correct.
So as our liability increases, this is something that we have to plan ahead.
It's better to buy.
Exactly,
It's
we
better
have
to
to.
be insured rather
to.
than at the end your next to kin will have to pay the installment. You have to bear all the costs.
Yes.
Yeah. I'm also very concerned with this. Many property investors, they just buy, they don't be covered.
Yes.
Yeah. Okay. Thank you so much, Elane. Thank you for being here. Thank you for sharing with the viewers that your experience in mortgage insurance. Thank you, Elane. And to our viewers, thank you for watching my property, and I see you in my next video. Thank you.
See you.